back to the Chris and Bob Show. Today we're going to cover part 2 of our series, Construction Lending. Today Chris is going to give us a little bit of information about getting started in the process and making sure you have all your ducks in a row, which is one of the biggest pieces that we want to stress about construction lending, is making sure that you know what you're getting into so there's no surprises. Chris?
Thank you, Bob. Like Bob mentioned, today we're talking about new construction, part 2 in our series, which is actually going to be starting to get into the loan process on new construction. Just like with any loan, any mortgage that we're going to do, the first and foremost thing that we're going to want to do is make sure that we're getting you pre-approved. A good lender is going to ask for your income, your pay stubs, your tax returns, your W-2s. They're going to ask for your bank statements too, because unless they're actually looking at those documents, you're just really talking hypotheticals at that point. So you're definitely going to want to have someone sit down and review that information, make sure that you're going to qualify for this new construction loan that you're hoping to get. And then one thing to keep in mind with new construction is it's going to be a little more expensive. It's going to require a little more money out of your pocket because the down payment requirement typically is going to be somewhere in that 10% range, whereas some of the other mortgage programs might allow you to buy an existing home for 3 or 5% down. So plan on probably coming out of pocket with a little bit more money on a new construction home. And the appraisal works a little bit differently on new construction. So with the appraisal, think of it like this. The builder is going to do some blueprints, and we're going to know the lot that the property is being built on. So we're actually going to appraise the property really early in the process before it's even done, probably shortly after it starts getting built, to make sure that when that property is actually finished, it's going to be valued properly in order to be able to secure the financing for you. So when you're talking about new construction also, you are a lot of times looking at 2 separate loans. There's going to be the initial construction loan, which Bob is going to talk about in great detail next week. And then there's actually going to be the end loan. So once the property's done, you're going to secure a long-term, let's say a 30-year fixed mortgage on that. One thing to keep in mind with construction financing is that from the time that you're pre-approved to the time that you actually do that end loan, there's going to be a lot of time that's going to pass. It might be 6 or 9 months in some cases. Make sure that there's not going to be any job changes going on. Don't decide to quit your job or take on a new job. Don't decide to go out and purchase a new vehicle or rack up any credit card debt without first speaking with your lender to make sure that any of those changes aren't going to affect your approval going forward. So with that, we'll send it back to Bob in the studio. Thank you.
Thank you, Chris. Lots of good information there, and we thank you again for tuning in. Join us next week for part 3 of construction lending. We'll be wrapping up the series, but we'll actually cover the construction loan and how it's going to work for you and what it means for your end loan and how that's going to work. So join us next week, and thanks for tuning in today.
Six o'clock on Friday evening, mama doesn't know she's leaving till she hears the screamer slamming, rubber squealing, gears are jamming, local country station just a blaring on her radio. Pick him up at 7 and they're heading to the rodeo. Mama's on the front porch screaming out her warning, girl, you better get your red head back in bed.